Welcome to Just Jackie, a monthly video series powered by Lydian Financial Services, talking all things lending and market updates. So let's jump in. Hi everyone, I'm Jackie and welcome to the Just Jackie monthly update for August, powered by Lydian Finance. Let's start with the RBA. So obviously big news with the cash rate being maintained at 4.10%. This, I'm sure, was a welcome relief for many borrowers trying to adjust their budgets. The key reason for the no change decision was mainly to do with the sharp decline in inflation. The RBA is feeling a little more comfortable with this decline, and I assume after seeing the very weak consumer spending figures, it was good enough news to balance out the other sections of the economy being hit hard. Retail spending as an annual figure declined 4%. So, is this the peak of interest rates in this cycle? Many believe so, with Westpac calling for rate cuts next September 2024. So, hold on. The cashback and refinance market has now cooled. There are still a few options, but this is also a nice change. Interestingly, while the RBA is on pause, the majors are increasing where they can, looking at their base variable interest rates and fixed rates. So this is definitely a great time to do a loan review. So let's take a look at some great lenders for August. For our owner-occupier loans, Move Bank is offering a 5.64% principal and interest variable rate available with no offset account. Bank of Sydney is also offering the same, a 5.64% principal and interest variable rate, but this does include an offset account. And also up for grabs is a 3-year fixed rate of 5.69% with Qudos. For our investors, Bank of Australia is offering either a principal and interest variable rate of 5.79% or an interest-only loan which has a variable rate of 5.99%. A good rule of thumb at the moment is if you or your clients have a 6 in front of their rate, it's most likely too high. It takes 5 minutes to review, so get in touch and thank me later. Now for a question from Alison in Newcastle. She says, I'm looking at refinancing my home loan and my bank told me they have priced the loan based on risk. What does this mean? Okay, so over the last couple of years, more and more lenders are reviewing the loan amount versus the value of the property, which is the loan to value ratio. So when the banks talk about risk, one risk is the loan to value ratio. The higher the loan to value ratio, you'll see the banks allocating a higher interest rate to those loans. For example, a 90% loan to value ratio, some banks will price quite high, whereas a 60% loan to value ratio, and some will price this very low. This isn't a one size fits all because some banks don't use this methodology to price. So, best to chat with your broker and review all your options. Thanks so much for your question, Alison. And that's our August update done and dusted. I'm so happy I could bring you some good news this month with the RBA pause. Have a great end to your month and I'll see you in September.